So 27% gain in 2021. I mean, that's pretty amazing considering the fears that investors seem to be dealing with COVID, interest rates, and inflation. Obviously, they looked beyond that. And as we know, the adage, the market trend is your friend, is applicable and usually is true. Now, trend means going higher. It's like the weather. What happened yesterday is more likely to happen today than anything else. But it's also very unlikely that you have 5 participants in the S&P, that's Apple, Microsoft, Google, Tesla, and NVIDIA, that contributed 30% of the gain in the S&P. That's really amazing compared to the broader index, and that's what we think is unlikely to reoccur this year. I mean, 27%, of course, that's highly unlikely, but that domination by those big names that were really agnostic to whether there was COVID or not, is something that is very unusual, and we think the broader market will have more appeal. We also believe that there have been these rolling corrections that have happened all year. You realize there are 250 names over $4 billion in market cap that are down more than 25% from their 2021 peak. And if you look at biotech or small caps, the SPACs, a lot of the high multiple on sales type of numbers that are in the ARC portfolio, whether it's CrowdStrike or Peloton and Zoom. You can go on and on with those names that are down 25 to 70%. So there are opportunities among that record, and it doesn't mean you just go with the same names that have outperformed this year.
Yeah, and
last year.
Sure. That's right. We all have to get used to that. Gunja, just to that point, I mean, if you look at just a one-year chart of the S&P 500, it looks like this really smooth ride. But really, there were these boom-bust cycles under the surface when it comes to, the kind of speculative growth stocks that kind of surged and then really crashed, as well as the retail trader activity. And I know you track this in terms of how much there was in the way of aggressive options trading. And it did seem to moderate throughout the course of the year. I wonder what you think, whether that's going to be a source of energy again this year, or did we see the peak?
Mike, that's a really good point. I think that was a key shift in markets in 2021, right? Retail dominance, they kind of cemented their dominance in markets. And money managers I was speaking to said they're tracking those flows more than ever before. Options trading at times caused fireworks across the market. And we saw these huge one-day moves in single stocks. And the crazy thing is, it wasn't just meme stocks. It was the NVIDIAs and Teslas of the world, right? Tesla in December jumped, $200 billion in market value within just days. And, if it's pre-market activity today up 7% is any indication, we might see more of that this year. And I think that's a key thing to watch. What does that single stock volatility look like underneath the broader indexes?
Yeah, 7% in a, trillion-dollar-plus company is real money for a pre-market move on the first trading day of the year. Carrie, if you don't think that you're going to see perhaps the same type of dominance from the sort of consensus winners that we saw last year, what themes do you think are maybe underappreciated at this point going into as we get going in 2022?
Yeah, well, I think that there are groups that have suffered, the payment processors. For example, Visa is a name that had, a terrible year. PayPal did also, but I can see them coming back. You look at a name like Autodesk, steady growth technology, not at the top of the list of many buyers of hot stocks. That's attractive. Amazon had a tough year last year after a very strong 2020. We would buy that name here. UNH. There are healthcare names that have, healthcare was really abysmal last year across the board, although UNH was decent, but sells at a decent multiple. Some industrials like Fortive, and I think that financials, Blackstone and Schwab are two names that we still like here. So, you can find names across the board that are not ridiculous multiples, that have solid earnings growth, and perhaps even benefit from somewhat higher interest rates.